Welcome back to the Investor Professor podcast. This is Dr. Ryan Peckham, and this is episode 183. On today's episode, we'll talk about the Supreme Court striking down Trump's tariffs and what kind of impact this could have on the global economy and where we go from here. We'll also talk about some companies reporting earnings this week that are going to be really impactful to the market. And then we will also talk about my friend Guy Spier and his recent letter to shareholders showing that he is closing down his fund. So all that on today's episode. Get your mind right and let's get to work. Well, welcome back to the podcast, everyone. Thanks for joining me here again. And man, we're recording this on February 22nd. So that's Sunday, February 22nd. This was USA Hockey gold medal winning Sunday. First time the U.S. has won the gold medal in hockey since 1980. Pretty tremendous, worth waking up for this morning. My time zone, that was 7 a.m. And so I had a great time, texting with buddies and, true friends and true fun, just kind of going back and forth. One of them is Canadian, and so the U.S. played Canada in that matchup. So that was a good time. So great to have a distraction from all this economic activity we're having in the stock market, and you see that this past week. I mean, the market is still struggling a little bit. The NASDAQ is still negative for the year. The S&P is about flat. Dow Jones still up a little bit, but we just seem to be kind of trading around this same level and just kind of plotting time, if you will. And so you look at the economic data coming out, the PCE number came out, which is what everybody calls the Fed's preferred inflation metric, was a little higher than was anticipated. So the market sold off a little bit on that. And then Friday, the bombshell was that the Supreme Court actually struck down Trump's tariffs. These are the IEPA tariffs, which account for about 3/4 of all the tariffs that he's put into place. And I think according to some of the sites I checked, that's already been about $160 billion worth of tariff revenue from those tariffs. And so basically saying that he can't do that. And now we start this, are the tariffs going to be refunded? All that, it's going to be tied up in the court system. They're estimating that it's going to be tied up for about 5 years. So, I mean, if you went to law school to be a tariff attorney, I mean, you never thought that this would be like your time to shine. I mean, this is your time to shine. So, we'll see what happens with that. Trump has already come out and cited another law where he said he was going to do 10% tariffs across the board. This weekend, actually yesterday, Saturday, he said he's going to up that to about 15%. Now, from what I've seen on this, it basically shows that he can do this for about 150 days under this new law, and then he has to have Congress basically extend that deadline. So I'm sure there is a team of, people working for him that are looking for different avenues to extend these and other laws to cite and different things going back, I mean, honestly, 100 years. And so we will see what comes from this. But again, the market kind of rallied on this on Friday, especially stocks that have been really beat up, that have really been impacted by these tariffs. So you look at furniture stocks like Restoration Hardware, and you look at Nike, and you look at just kind of companies that import a lot of goods from other countries, and you saw them move. I don't know, it'll probably be a little short-lived. I mean, this is definitely not something that's over. But as far as what we're concerned, the impact here is that it seemed like the world was kind of getting used to where these tariffs were, and we had kind of moved on and said, okay, now we have these in place. I mean, we're coming up. I mean, I guess we have a little bit of time, but coming up on the 1-year anniversary of Liberation Day. And so now the business community kind of moves on, and we know what the playing field is going to be, and so we can kind of make adjustments. And now that kind of gets completely reset again. And so there's just many businesses where we've talked about it many times, that uncertainty prevents companies from making decisions. So if they don't know what the rules of the game are, and they don't know how to set up their business for those rules, they will just wait until it's a little bit more clear. And so I think you're going to see that happen a little bit here as well, where, okay, we don't really know what the rules of the game are. We're thinking about doing this. Maybe we wait a little bit. And so that can curtail some economic activity until they really know what the rules of the game are. So again, that is going to be big conversation this week. As far as what that impact is going to be, you're going to hear that all over the news, and kind of looking to see what are companies going to do in response to that. I mean, with the expectations that some countries and companies might get refunds in 5 years. Not only that, like, how much are they going to have to spend on attorney fees just trying to get their money back? How do you get these refunds? How does the U.S. pay for these refunds? Like, all of this is going to be up in the air. And it was a huge part of Trump's economic agenda. And it was obviously a big part of his, the tax code, the big, beautiful bill. We're going to give businesses these tax cuts. We'll make up that money with the tariff revenue. And so this really does impact his economic agenda. The Supreme Court voted 6-3. So, I mean, you also have that vote hanging out there. And so this is definitely not something we know how this ends, but something we're definitely right in the middle of. And then this week as well, we have earnings coming out from Nvidia, which is going to be, as always, Nvidia usually reports late. So there's, a lot of eyes on them because most of the other companies have reported. Obviously, there's been a lot of talk about AI and data centers and the money being moved around that. So that report from Nvidia is going to be very, going to be important, especially for all the other AI companies that have really been kind of beat up this year, especially some of those software as a service companies that we discussed last week, and kind of all the things going on with Anthropic and all of that. So that will be kind of probably the anchor for the week, along with the tariffs and kind of how Trump responds to this. And so we'll see how that plays out. There's also a big contract dispute going on right now that you should be aware of between Anthropic and the U.S. government, and Anthropic not wanting the U.S. government to be able to use their Claude product for certain things, especially like autonomous weapons and things of that nature. That they got this contract with the government. It's about $200 million that's in play here. And so this could have repercussions through other companies that are basically doing contracts with the U.S. government, that if Anthropic and the U.S. government can't get a deal, other companies wouldn't be able to use their product to do their contracts with the U.S. government. So there's just a lot of moving parts here as this AI kind of gets, as we see it moving towards different things. There's an interesting article in the New York Times this weekend as well, talking about how a custom internet is coming your way, which would basically mean that if all these AI programs know your life and know your background and know your birthday and your spouse's birthday and your kid's birthday and all of these things, custom things, that the companies that market to you could at some point use that against you. So for instance, they know that your spouse's birthday is coming up. So companies that are advertising to you actually increase the price that they're offering it to you because they know, hey, this person's going to have to buy something. So interesting to think about. We always think about, okay, man, this stuff's always going to be great for us. But what would the negative consequences of that be? I think will be interesting to see how that's going to play out over the next couple of years. We already see that, right? Like if you're, shopping, or you just Google something, you're looking up a trip or whatever, all of your family members who are on their phone all of a sudden start seeing advertisements for what you were looking up. So it's already pretty difficult to try to surprise somebody with something. So this is going to be quite interesting to see how this customization happens in the future, and basically how much customization is too custom. So definitely going to be interesting to see the companies that are involved in that, and then also consumers and what do consumers actually push back on, and do buying habits change as these new products start to roll out. So I think I'm, probably can speak for most of us here that I've noticed that, if you're on social media, whatever the platform is I think I've, noticed a lot more advertisements this year. And then also not just that, just like even in videos that aren't advertising, it seems like they're advertising at the very end. They throw in an ad for something. So I think that that's going to increase in this really what's real, what's not real type world. Other thing I wanted to talk about this week, and definitely a much more serious, much more somber tone, is my friend Guy Spier, who I've had on the podcast before, a mentor of mine. It's the most popular episode we've ever done. It's episode 153. If you haven't listened to it, Guy Spier is a money manager, hedge fund manager, runs the Aquamarine Fund out of Zurich, Switzerland. He did the book Education of a Value Investor, which came out in the early 2010s. I think I read that book when I was in my early 30s, and I've talked about this before, but I just want to talk about it again because Guy is closing down his fund, and he's doing so for health reasons. So he has glioblastoma, which is also, brain cancer, basically. And he had some health scares, and him and his team decided that the best thing to do as doctors was to basically send back investors their money, and which had to be an excruciatingly difficult decision for him, because as somebody who's also spent time building a business, I mean, you work so hard for something, and then to have to, call all those investors and say, I'm sorry, I've got to send you back your money, which is essentially what he's doing, has got to be incredibly painful, and he would not be doing it unless there was some big reason, which obviously he has. I think it's kind of sad. I've talked to you about, how to look up professional money managers, holdings. So you can go to websites like Well Wisdom, and there's tons of them out there. But basically, every professional money manager has to show what their activity over the last 3 months. And so it's public information. And so before he could come out, and basically I'm sure he was writing a letter to his shareholders, and before he could come out publicly, there was already these videos showing all the trades that he had made and how much cash he had raised. And they were saying, oh my gosh, Guy Spier's selling out, and all of these things, but they didn't know the story behind it. So now Guy wrote a 15-page letter, I have it here, to his partners, where he does in just an amazing way, talks about how difficult the decision was, talks about why he's making the decision, and in true Guy fashion, I mean, he goes over some of his best investments he's ever made, and he also goes over some of his worst investments that he made, and he talks about the just things that don't even show up on the page, investments that he could have made, areas of omission that really don't that actually don't show up when you're just looking at raw performance data. And that's the one thing about Guy, is he's just so honest. So when that book came out, I was about 31, 32 years old. I had started my investment firm at 29. And, what they don't tell you when you go into the world of investing is that it can be a very lonely place. There's not a lot of people who truly want to help you. People are constantly maybe trying to take your ideas or tell you why your ideas aren't great. It means just early on in the business, it's just not a very, I don't know. It's very lonely. And so I've talked on this podcast many times about looking out for mentors, and basically saying that mentors don't even have to be people that you know in person. I mean, I've quoted Jim Rohn a lot. I've talked about, John Wooden, the UCLA basketball coach. I mean, these are people much older than me. They've already passed away, but through their writings, through their videos, you look for people like, man, who do I want to model my life or my career or my practice after? And so it's not necessarily that you ever have to meet these people. You can gain a lot just from kind of reading about them and those kind of things. And so for me, Guy was a big, important part of my trajectory, because at the time, I was looking to start an investment practice. And of course, everybody thinks you need to be like in New York or you got to be somewhere big. And I looked at Warren Buffett, who did it in Omaha. And then I'm reading this book about Guy Spier, which, he became well known because him and Monish Pabrai, they bid on the Warren Buffett lunch. And then they were able to, basically after that moment, Guy was like, man, I'm never going to be Warren Buffett. I should stop trying to be Warren Buffett. I should be true to myself. I should go back to Zurich. I'm going to have a, great practice. I'm going to do a fund. I'm going to do it the right way. And that was basically the lesson of the book. And so I'm reading this going, man, if I could maybe I could do the same thing. Maybe I could set this up in a way where for me, it's more sustainable. I'm not going to burn out. I'm going to work with good people, like all of these things. And at that time of my life, this was a very, very important book for me to read. So fast forward, I don't know, however many years, I've started to gain a little bit of success, and Guy Spier decides to do the same thing. He does a charity lunch, and I'm sitting there, this is 2 years ago, and I'm thinking, man, I'd been in rooms where Guy had been at the Berkshire Hathaway meeting, but I hadn't really met him, in person yet. And we had this lunch come up, and I said, I think I'm going to try to bid on this just to tell him thank you, and basically just to be able to say, man, I just want you to know your book meant a lot to me. How, the videos that you've put out have meant a lot to me. Like all of these things, I just wanted to basically be able to tell him thank you. And so, as many of you know, I won that lunch. I got to, spend a lot of time with Guy. I got to meet him, got to do all these things. And the one thing about Guy, and you're going to see, if you're in this, you start searching his name and you look at other podcasts, there's a lot of other people doing the same thing that I'm doing, just saying, man, Guy, thank you so much, is because Guy is such an anomaly. He is such a connector. He is, I told him this and I was like, man, you are a super connector. He's never met anybody that he's really, that he's a friend of everybody he meets. He's so generous with his time, with his contacts, with referring you to people and introducing you to people. I think that's the one thing that everybody would say about him is he's just so honest and kind, and he's just such a good mentor for so many of us. But he's also so great at bringing people together. You're talking about a bunch of finance people who are probably more comfortable behind a book, behind a computer, in front of numbers, and you got, Guy out there basically pulling people together. And so he's just been such an important part of the finance community, especially the value investor community, and just, in the way that he's been able to do this. And so for so many of us, it's just become a shock because Guy is not that old. We expected him, and he even says it in his letter, he expected to do this a lot longer. And it's a big realization for a lot of us that, Buffett, as great as he's been, he's also lived to be, Buffett right now is 95 years old. And Guy is, I believe Guy just turned 60 years old. And it's a very big reminder to us that none of us are guaranteed to get to live, and obviously get to live to be 95 like Buffett did, and Munger was 99. And for a lot of us, it's a big realization that, hey, like that's the anomaly. Like that's not the normal. Like this is real life. So, it takes a lot of bravery for a Guy to do what he did, to put that out there, to write this letter. I'll attach, hopefully I can, a link within this podcast if you want to go read the letter. But it's honest, it's beautiful, and and it just makes you realize to be appreciative of what you have, and obviously working hard and all those things. But, I just wanted to take the time to just say thank you. So many other people are, like I said just a minute ago, are going to do the same thing. But it's just such a big thank you for being so generous and for just doing so much for the finance community and pouring back into it, when so many times in this business, when you meet people, that they have an alternative motive. That they're trying to look for an angle. That they're trying to, size you up and all of these things. And Guy has just been so generous. I remember meeting, when I was talking to him, I was like, man, I love the way that you did this. I like the way that you wrote this. And he's like, use it. Like, go for it. Like, use it with your clients, use it with whoever. Like, he's just always been that, that kind of person. And I just, it's so rare. I can't even put into words like how rare that is in this business. And for that, I say thank you. So if you want to go listen to the episode I did, It's episode 153. You can watch the video on YouTube. It's a great interview, and just an amazing person and an amazing friend and an amazing mentor. So Guy Spier, thank you. This podcast contains general information that may not be suitable for everyone. The information contained here should not be construed as personalized investment advice. There is no guarantee that the views and opinions expressed in this podcast will come to pass. Investing in the stock market involves gains and losses and may not be suitable for all investors. Information presented here is subject to change without notice and should not be construed as a solicitation to buy or sell any security. Ryder Equities does not offer legal or tax advice. Please consult the appropriate professional regarding your individual circumstances. Past performance is no guarantee of future results.